Good morning. U.S. President Trump is making a mistake with Kevin Warsh. Easy markets honored by TradingView for customer support excellence at 25 years. Fed's Goolsby, there are potentially several more rate cuts. CK, strong labor data reduces cut risk, Danske Bank. Australian dollar, U.S. dollar declines on RBA minutes. U.S. dollar cautious ahead of Fed minutes.
Fed's Goolsby, Servy's inflation is not tame.
Iran foreign minister. There have been good developments compared to last round of talks. ADP employment change. 4-week average rises to 10,250 through January 31st. Yeah, boy! You guys ready? Just got to find the chat. Hang on. I'm all over the place. Where's the YouTube chat? Hang on. I got to log into YouTube. Found it. All right. Good morning. Welcome to Forex.Today. The YouTube community of more than 21,000 foreign exchange traders. Let's go. Good morning. Hey, it's 9:30 in the morning. Do you know where your pips are? U.S. stock market is opening. Generally risk off right now. Shortened trading week since we had the holiday yesterday. President's Day in the United States of America. And China, and not just China, I think much of Asia is also closed due to, what is it, Golden Week? Something like that. But anyways, it's an odd week for trading. We have lots of news. We have lots of earnings. I believe NVIDIA is next week, and so we're prepping for that. I think we have Fed meeting minutes, and so we got to discuss what's the likelihood of cuts, and we need to look at the Fed funds futures market, and yeah, but besides that, pretty basic stuff. Also, I'll be in Las Vegas next week. Be ready for that. So I may be hard to find Monday and Tuesday of next week. I think in order to do my webinar on Wednesday, I'm taking the red eye on Tuesday night so I can land at 5 in the morning, drive home. Well, have somebody drive me home, and then go straight to to our morning live stream. So anyway, be flexible with me. I mean, you always are. Yeah, it's complicated. Life's complicated, huh? Yeah, markets are complicated too. So anyways, what do you want to do today? Technicals, fundamentals, huh? What do you got going on? You want to swing trade? Position trade? What's going on? Well, we're getting pretty close to that time in which we enter a period of maybe soon moving toward new position trades. We call that seasonality. Yeah. So let's get on with it. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term. Never risk money you cannot afford to lose. Yeah.
Why natural gas prices are falling?
Cool. Now, I wonder why FX Street is writing articles about President Trump making a mistake with Warsh. I think Warsh is a fantastic pick. So I'm not sure who on FX Street wrote that. One of the prime examples is gold fell the most in the history of gold in one day. The largest one-day fall ever. And we've been trading silver a while. And it happened specifically, precisely when Warsh was nominated. And that was the catalyst for the greatest fall in price for one day in the history of silver, which tells you people took a sigh of relief to say, oh my God, this Warsh, that's so good. There's no need to hedge the dollar if it doesn't need to be hedged. So I'm not sure who at FX Street wrote that, but I think I might go toe to toe with that person and say, well, you tell me what you think, and then I'll tell you why you're wrong. Yeah, what I find so far is that people have a very superficial opinion of wars based on what the media says, but the media then has a very superficial, overview of what he was saying, because almost nobody in the media was actually in the 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 throes of trading and investing during the 2008 financial crisis, and then again during COVID. They weren't traders, and on top of that, they probably barely understand basic economics, in particular around the idea of investing and trading. So they misunderstand. And so the one thing, I don't read a lot of media, almost none, practically none. I think it's safe to say I don't read media. I don't do social media either. And but sometimes I have like Bloomberg and CNBC running in the background. And so sometimes I'll hear things like, well, he said that,
Oil,
the Fed was.
geopolitics, and OPEC Plus shape supply outlook. Commerzbank.
Turn off the squawk box. At one point he wanted to cut interest rates, and now he wants to raise interest rates, and now he wants to cut interest rates, and now he wants to, he contradicts himself. And that's where I just kind of chuckle. I'm like, dude, you don't know what the heck you're talking about. Because there are times when you should be raising interest rates. And there are times when you should be cutting interest rates. Yeah. And over 20 years, have those economic conditions gone from one to the other? Yeah. Yeah. But the big thing about Warsh is he thinks the Fed is too big and too slow. And I 100% agree with that. Yeah. It's not that at one point he suggested cutting, and at a different point he suggested raising. It's that the Fed is too slow to make the decisions. So bring it on, Warsh. Let's go, Bubba. But the biggest thing is he's not a crony. He's not just going to do what President Trump's bidding. And that's what people were panicking about. That's why silver and gold went through the roof. Now that's not a stress. And zippity doo dah, that's why we're back. So that to me tells me what the market thinks. You have a 30% drop in silver in one day. That's good. So whoever wrote this at Epic Street, I'm like, well, let's talk about it. All right. Let's go. What do I want to do on any of these? Yeah, let's do a sit rep. There's Thursday recording on YouTube. Very cool. This is what we did this morning. Should have updated by now. Let's see. Boop, boop, boop. 22. Holy shoot. Look at VIX, huh? Wow. Gold below 5K. Oil below 53. Yep. Yep. Okay. I'm observing a current risk score of negative 1.95, so negative 2, indicating a neutral to mixed sentiment in the market. This score reflects recent movements in the yield curve, particularly observing a drop in the 10-year yield. Yeah, we're on our way back down to 4, aren't we? That could signal some easing in risk aversion, particularly in the stock market and gold commodities. Concurrently, shifts in Forex pairs such as USD CAD add complexity to the trading environment as the dollar shows minor strength amid the mixed outlook. Also, we are noticing foreign flows out of Canadian assets. We got that news from our Squawk Box this morning. Yeah, so even though I'm not tracking that inside of TRADARS, we tracked it through the Squawk Box. It was reported to us while we were meeting this morning. I thought that was quite cool. Maida, I'm not sure if I got your email. If you emailed FX Bootcamp, that's not working anymore. And I am transitioning the corporate structure over to TRADARS and all that kind of stuff. So FX Bootcamp is not the brand or the contact anymore. So you'll, if you're emailing me at my TRADARS account, then I do. Yeah, I gotta set up a catch-all for those still going. But on the 20-year anniversary of FX Bootcamp, I retired. Yeah, cool. So how do you feel about the market, everybody? Risk off. Cool. Simple enough. Let's burn through some charts. Bullish. USD Swiss franc. Bullish with the scalp neutral. So we're waiting for it to turn green again. Little pullback in USD yen. That's fantastic. That's what we want. Uptrend with a pullback. Okay, US pound USD. Bearish with the pullback. That's great. We want to sell that high. Euro dollar, Oscar Mike. We also want to look for a lower high, lower low. We're right into that zone. Check your daily pivots. USD, Aussie USD, same thing. Fairly neutral long-term trend. Okay, but short and medium-term congruency. And very, very short. So again, you want to break this into 3 time frames. Long-term short, medium-term short, okay, short-term short. So when you see these, what you're really looking for, since you've already decided bearish, okay, you want to kind of start eyeballing these the best you can. Now you might want to use a Fibonacci analysis or something like that, but your general operating procedure here is doop, doop. Okay. We're just analyzing trends statistically on 3 different time frames, like 3 different charts. And it's not opinion. It's not like, well, subjectively, if you connect this high with that low. No, 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 no. This isn't subjective. It's statistical. So you can see down here, we have the slope calculated as a percentage change per hour because every hour this updates. But we also look at the standard deviation, which tells us basically the implied volatility. We have linear regression built into that because that's part of the standard deviation calculation. But then we do linear projections, which is based on the slope and the standard deviation. Okay. So that's where I get an idea like this. This is your general operating procedure. Cool. Mr. Wayne, this chart is frozen? What do you mean it's frozen? Are you saying it's old? Could be. I'm deleting millions of records right now. So I'll go back and double check. The functionality is great, but if the prices are old, I got you. I'm going to skip the fundamentals. I'm just going to do some quick analysis here. Let me do something. Okay, we'll see what he's got on there. One of the things we've been doing is rebuilding price history and improving the efficiency of our data pipelines in the background. So there'll be little things like this throughout, but they're not breaking, they're being updated. So it's a good thing, as Martha Stewart would say, without the insider trading, of course. All right, so USD yen bear, look at this. This is a sell zone. So the idea of looking at this, now remember this is technical analysis. What we had just done with the trend is statistical analysis. So if you are a bear on this, you're looking for a trade like that. In fact, it's already labeled. So if you know basic pivot point training, or theory, you know that this is the trade plan. You can see. I mean, it's drawn there. There's no bullish trade plan. What you got to be careful for is the projection is this way. So what this is telling you, there's 3 things. Down, this is the right price to sell, but it's not the right time to sell. Because on a chart, all you have is time and price. So moving averages, I break down into time and price. Oscillators, I break down into time and price. And what we have right now is, okay, we know the bias. Are you a bull or a bear? What is the market right now using technical analysis? It's neutral. Dude, this is cool stuff, isn't it? So the way I break it down now is it's saying neutral, broken above daily sell zone. Okay, fine, good, fine, good. What I'm looking at now is, okay, this is the right price. Somewhere between here and here is the right price. So if everything in trading comes down to time and price, we're at the right price, but it's not the right time. What we're doing here is trying to help you with, okay, the time. This is the implied volatility right now, otherwise known as best case, base case, worst case scenario. Now, it's doing the chart independently of this fundamental bias. So this might be bearish, but the chart, or let's say not the chart is bearish the way it's set up. It's set up following the bearish bias, but it doesn't mean the price action is bearish yet. The thought process is, if or when the price action becomes bearish and we're fundamentally bearish and the trade setup is bearish, well, hell's bells, you might be better off selling then. And then is defined as the time that it occurs. So look at this projection. This is the one I love, and I'm gonna increase or improve the clarity of these charts even more to say, when this projection starts to flatten and even go negative, somewhere in that process, I mean, to think about it, to change the slope of the mean, you'll need a reversion to the mean and probably a lower high, lower low in price. And when that happens, the trend will flatten and invert. So somewhere in the process of flattening and inverting, you get short. You get short on a lower low, lower high, and a new projected lower low down to the M1, and that puts you short on a kickoff off the central pivot in something that is not so good. You see? So they're very simple charts to read, in my humble opinion, but it's very complicated analysis. So one of the things that I've seen over doing this coaching for 25 years, or not coaching really, sharing for 25 years, is it looks easy when I do it, and then you go to your charts, you're like, oh, dang it, it's confusing. Up, down, sideways, I can't figure it out. Help me, Wayne, what would you do? This is what I would do. This is the most beneficial use of artificial intelligence. I've taught AI, built our own large language model, and it knows what Wayne would do. And I'd say it's 95% accurate, which means almost always, right? What is that? 2 standard deviations of accuracy? So now I'm just going to kind of, in the 5% of the time, maybe I might kind of slightly tweak the analysis. I'm going to tweak it, and it's going to get nearly 100% accurate. So now you're like, okay, Wayne, I'm looking at this Aussie dollar, and I was thinking about buying it. What would you think? Oh, no, no. Okay, no. So check that out. Isn't that beautiful? So what do we know using standard pivot point theory? Why is it green down here? Because the day trade, sell in the pink zone, take profit in the green zone. Red means down, green means up. Unless you're in Japan, and I've been told it's the other way around. Okay? But the cool thing about the clarity of this chart is there's nothing pointing up. Nothing bullish. Because you're like, well, Wayne, if you draw a whole bunch of lines, they're all going to look like support and resistance. Totally agree with you. Standard pivot point theory says, or my standard pivot point theory, what I've been teaching for 20 years, is that if you're a bear, you only trade these two pivots. Let me say that again. If you're a bear, these are the two most important bearish pivots. What about all the other pivots above? Well, why would price be higher if you were a bear? How could you be a bear when price is making a higher high? Well, you can't be. So the way this is set up based on our fundamental and comparative analysis of Australia versus the United States dollar and seasonality and all these different things and COT positioning and flows and all the things that go into this, well, it ain't going to fall. I mean, it can do anything it wants. It's just it's not probable. If you do the math, it's just like, well, it can go up if it wants to. It's just not probable. So what's the most likely scenario for this pair? Down. Okay, Aiden, with that in mind, only draw bearish trade plans. You see how genius this is? Ignore all the other possibilities because they're not likely to occur, so what do I care? But if they did occur, I would notice, and that would be a great heads up. So anyway, so now I go into Aussie dollar, and this is another thing that I've been teaching forever. New York is the end of the day. There's only 2 more hours of trading and the day is over. The day is done. So if you live in the United States and you're rolling out of bed and you're like, hey, what's up, fellas? What are we trading today? This is the major disconnect. You're winding down your trades. Where were you in Asia yesterday? Where were you in the London Open yesterday? That's when you're supposed to be making your trades. You see? So when I look at Aussie dollar, yeah, it's almost done. You should have shorted it, and it looks like London Open. Where were you in London Open? Sleeping. Huh. So what are you going to do now? Okay, best, most radical low for the day would be down here at S3. But the normal pips are done. Okay, USD Kitty Cat. It's so up that the buy zone you can see was down here. So the trade plan for the day isn't actually R3. This is the best case scenario and the most aggressive target we have for the day, but we call that extreme. So the trade plan in Asia would have been down here slightly. Okay, it's just not quite on the chart because it's so low. Excuse me. But that's what it said for me last night. For you, might have been early this morning. And the basic trade plan is to R2. Just like this basic trade plan is to M1. So I would score these as successful day trades because in our methodology, we list this as could, should, must. Could, should, must take profit. Could take profit, should take profit. Down here, must take profit. So really, the most logical target, okay, is right in this green zone, right in this red zone, right in this green zone. It may go a little further. It's just not normal, in particular based on what happened yesterday. Well, now we're hitting our threes today on the daily chart. Does anyone know why? Well, because yesterday the markets were closed in the United States. They're also closed in Asia. So we have very low volume and volatility. Therefore, the daily pivots are going to be frozen. This is why you shouldn't have been trading yesterday. This is why I didn't do a webinar yesterday. This is what you should be learning. If you were trading yesterday like it was a normal day, think about it. Millions of traders around the world knew the markets were closed in Asia and the United States, and you traded it like a normal day because you didn't know. So millions of people knew and you didn't know? Is that something you want to address, or are you going to get mad at me? What would your mama tell you? Whose fault is it? Okay. So now you say, well, I gotta know these things. Yeah. Could be a rabbit, could be. Oops. Over. Yeah. And there, we fixed those charts. Thank you, Aiden. So normally, like when you log into TRADARS, when we do our live webinars there, I'll go over the swing trading, which are trades that last several days to a couple of weeks. Position trading, we cover, and that's a couple of weeks to several months. Yeah, like the quarter. Yeah. Okay. Nice. You like crypto? See, I'm skipping over a lot of our assets. Like I could have gone in our trend analysis, I could have gone through all the crypto, all the commodities, the stock indices, but this is a free webinar on YouTube. Now, let me know if you guys are interested in a rebate program. Some of you guys are in a beta version of this, but you sign up with our execution partners and you earn a rebate on your trading based on volume. So if you trade enough, you might get a $25 rebate or a $50 rebate or a $100 rebate or a $200 rebate. But the point is, well, it should be free. And you're like, oh, well, that's good. Wayne, can I have more benefits than just that? I'm like, what? Like, Wayne, that's great. I love it. I'm a trader anyways. I might as well use your trading execution partners because I love TRADARS and I trade with it all day. Great. Cool. But can you make it better than free? Oh. Would you like your spread narrowed? Yeah. So how about the end of every day, we take some of the commission you paid on the trading, the spread, and we put that cash into your account. So now your spread is a little bit cheaper. Dude, what more do you want? Like, wait, trading is cheaper and you get TRADARS for free. Yeah. So anyways, let me know if that's the right thing. Okay, but we got what you need. Got what I need. Sutu, the king. Oh, I guess I can show the test that I'm making. So I'm building variations of this. I have this. Now, a lot of it's incomplete. I'll complete what I can today. But this is a beta. I'm playing around with it myself. I'm getting feedback from TRADARS subscribers. And then I have another version that I will add as a beta. And the idea is to look at the things in both variations that we like and things that we don't like, and then see maybe we can combine the two and find out something that works best for everybody. Okay? And to give you a feel, you're like, okay, Wayne compares interest rates and jobs and inflation and GDP and momentum and trend with our different versions of technical analysis. Okay, think of it as price and market, just like in the book. My book, yeah, so I actually do it here, price and market. We call it momentum and trend. And then compare, and then seasonality, which I just haven't populated. So imagine that gets populated. And then Aiden does comparative analysis between the two, because remember, there's two data points here. Interest rates in the United States or in Europe. Well, they're higher in the United States, so the carry favors euro dollar, so that's a negative score. Euro dollar should fall just based on rates. Jobs favors the United States. Inflation, actually favors Europe. Okay, GDP favors the United States. Just kind of neutral. Kind of neutral. All right. And then we'll look at seasonality and all that kind of stuff. And that's how we get the score of -7. Now, -7 wasn't enough, so we broke it down and did the math to be quite granular and less binary, very granular. Because before we were binary, right? You had a score of like 7. I'm like, well, I don't want a score of 7. I'd rather have a score of 6.99. So I can get very discrete. Is that the right word, discrete? Well, at least granular detail. Right? No, discrete is binary, isn't it? So, but anyway, so I wanted granular detail. And then I wanted to say, or to share with us, the users of TRADARS, okay, Wayne, I like the table, but that's such a basic summary. I'd like to be able to kind of have a better visual. Can you build something to maybe help me, like analyzing greater? Oh my God! Analyzing greater detail. Yeah, well, how about that? So we got the Commitment of Traders report. I'm teaching it how to do retail sentiment calculations. Seasonality, I just haven't populated. So imagine you saw a trend in seasonality. Here's the breakdown. Here's the bias based on Aiden's analysis of these two economies. But I want to add even more detail here so you can see, because we'll start to remember like what the inflation is in Europe versus the United States. Like, not everyone can memorize that CPI in the United States is 2.4%, even though it just came out 2 days ago. You might not remember. This only shows it favors, okay, that inflation's improving in the United States and it's stable in Europe and low-ish in Europe, so that's actually quite neutral. So he's thinking about it, you see? But I still want to do a head-to-head. This is what I have in mind, where maybe lower, or maybe I build a new card or something, so that you can see European jobs versus U.S. jobs. Now remember, we can't compare number of jobs or NFP or jobs added, because the numbers and the scope and scale are quite different. You can't compare the United States and New Zealand with number of jobs added, because I think if New Zealand gained 100,000 jobs in 1 month, it would be extraordinary. In the United States, we'd be happy. So there's a difference between like, oh, that's decent versus holy smokes, that's unbelievable, right? So what we need is to be able to compare apples to apples. And so what we're looking at is the unemployment rate, the year over year percentage change in unemployment. And so that's where we get all of this. And so you can see we're really kind of moving towards some pretty nice clarity of what do you think euro dollar is going to do. So remember when people would log in, they're like, hey, Wayne, what do you think about euro dollar? That's what I think about. That's what I think about euro dollar. Cool, right? And that's a nice hybrid between technical and fundamental analysis, which is good. So once I'm done building this, what happens is we have a central repository, aka Aiden's brain. And then from the central repository, populate the different applications inside of our platform, you see? And so what I want to see is, congruency where even though these trends are defined uniquely, we have a trend radar which defines it much differently. And at some point, I would like them to be more similar. Right? Our trend radar is very statistical. These trend radars are based on, I think this trend I made based on, actually, based on moving averages, moving average price action analysis. And I got it back. Momentum is based on moving average and price action, and trend is based on the statistical analysis, but also on MACD. So Aiden's very good with MACD. I spent a lot of time teaching Aiden MACD. We don't draw it. You don't need to. But MACD is very subtle. This is why Jared Appel invented MACD. And, almost no YouTube gurus uses MACD properly. They don't even know the math. Therefore, they don't know even how to use the proper settings. And I don't know what your average knucklehead YouTube guru knows, but they don't know the math. So anyways, it's very good at showing you subtleties in the trend. So if you use it right, you can say bullish but modest, or bullish and aggressive, or bearish. Oh, Abdul. Well, my goal is that I want TRADARS to be free for you. So the goal is to give you your full rebate back, right? Or your full subscription cost back. So let's say you're paying $200. I'd like you to get $200 back. Now, how do you get the $200? We have to actually trade. So you'll get a smaller spread, and we'll track your volume. And if you trade enough, I'll give you a little bit. If you trade a little more, I'll give you a little bit more. If you trade a little bit more, I'll give you a little bit more. And at some point, and some people in this webinar actually get a full rebate. I have to send the rebates today, in fact. So the idea is this should be free. Yeah. But here's the thing, and this is what I've been saying, and in the logic of my pricing and everything. When I first started trading Forex professionally 25 years ago, not quite 25 years ago, the bare minimum cost of being a Forex trader, not including the money you put at risk, just the infrastructure of having charts, having an account, having tools like the COT reports and stuff like that. I spent thousands of dollars a month. Bare minimum. Just straight up thousands of dollars a month as overhead to be a retail Forex trader. Trading out of my home office. Yeah. Yeah. That's a long time ago. Okay. Yeah. Now my master bedroom's bigger than that first house that we owned, which is great. Lots of water under that bridge. Thousands of dollars to be a Forex trader per month. Yeah. And so TRADARS is $200 a month and is far more data than I had for thousands of months, right? Or thousands of dollars per month. So to me, it's ridiculously cheap. So even if you want to use a different execution partner, dude, if you don't see the value of this being worth $200, I think you don't know. Oh, and Denise, thank you for the patience and the loyalty that you and many, many, many other people have extended me far beyond logic. Yeah, but thank you. So guys, like, this is dirt cheap for 200, but if I can get your $200 back, I'm willing to do it. Instead of putting it in my pocket, I'll give it back. But even if you're going to pay for it, dude, it's so ridiculously cheap. It's laughable. A Bloomberg terminal is $2,200 a month. And this is a heck of a lot prettier. You know what I mean? So right now we're risk off. There's no doubt about it. So in the short period that we've been talking, how long have we been going? Half an hour? You can see the score is changing. It's changing. Like, we're always up to date. The idea is, do you know what to do when the market is moderately risk off? Do you know what to do? Well, correlation matrix might help. Yeah. The other thing that might help is you just pull these up and say, what's moving right now and in what direction? It looks to me, right, down for these dollar pairs, right? Dollar strong, right? Can you confirm that somewhere else? Well, we already confirmed that. First of all, risk off. My assumption would be dollar strength. But check this out. Dollar strength, dollar and yen strength, dollar strength, dollar strength, dollar strength, dollar strength. So not only can I confirm the dollar strength, I can put them in order of buy this, sell that as my first step in the day. USD CAD up, Kiwi and USD Kiwi down. So now when I look at this, you can put these things into context, you see? And what does it tell you? Well, if you had paid attention yesterday, you would see in the trend radar that our trend, which I just showed you on the other page, this is up and this is down, which is part of this. So now it puts everything into context. So in Asia and in London, this is your buy zone because you're a bull. If you are a bear, which you are, then somewhere in the Asian and your London Open, that's your sell zone. And this is the most extreme target you could hope for today. This is just a pissy little day trade. And the logical target for Kiwi dollar today, and only today, we've just hit. So you should expect a higher probability of this now because we're in New York. We've already hit the target. Don't you think a professional might take profit? But then you say, oh, yeah, but the pivots are tight because yesterday was a holiday, so I'm going to go for S3 today. Cool. So what does that look like? Well, now that's your theory. So now how do you trade that hypothesis? Okay, well, I already got it. Worst case scenario, base case scenario, best case scenario. So let me thread the needle for you. Probably out by the London close. You need bigger trade plans? Well, then you need to be a swing trader or a position trader. But this proves my point that I've been teaching all these decades. If you log in to New York and you're just starting your trading day and you haven't even figured out what to do, well, you're an amateur and all the professionals are taking profit. And what you probably see is a counter trend. So you need to swing trade and position trade as well to know if your opportunity that presents itself in New York is a short-term opportunity to hit extreme targets, or are you actually counter trend trading, meaning you're buying at support because bears are also buying? Well, why would a bear buy? Because they've been short for hours, if not days, and they've decided to take profit. So bears are buying. But you might be a bull because all you see is some green candles and you're like, look at me, I'm a bull. And actually the bears are in the market, controlling the market, and there are no bears. You're out there on your own. And so what's more likely to happen? Well, when you get resistance, you're going to lose flow. So anyways, that's all. You got to know these things. They're not a mystery. We have the data. Yeah, we have the data. So anyways, TRADARS.com, y'all. Yeah. Yeah, you can start for free. That's it. Start at how much value I give you for free. Because I know if you don't got no money or don't got no confidence, over time that might change, and I will have earned your loyalty and respect. And as soon as you have the confidence, or as soon as you have the cash, you're like, I'm in, Wayne. I'm in. I want to be part of the community. I want to be part of the team. I want us to collaborate and work together every day, Wayne. Wayne, I'm going to hire you to work for me, but the most I'm willing to pay is $200. Yeah, I laugh because I'm like, yeah, well, whatever, $200 a month. I mean, not $500 an hour. Yeah, $200 a month. So you're like, hey, dude, I think that's fair. So I love you, babe, but I got to jump. That was real. I want you to succeed. So if I have to tap into 15 government agencies and institutions around the world to pull in data and aggregate it and then interpret it and then make pretty colors for you to understand the interpretation of what the hell does that mean? Remember, TRADARS is not a data dump. There's plenty of sites out there where you can get the data. It's just like, here it is. Here's the number. But if you don't understand like the context of CPI in the United States being 2.4, and you're like, well, what does that mean? Like, if you don't understand the context, it's totally worth it. So everything about TRADARS is built around being a trader. They're radars for traders. We got to make trading decisions, short, medium, and long term. We got to make investing and trading decisions, and not just based on what happened yesterday, but we have to have a clear view of what may or probably would likely happen based on statistical analysis in the short, medium, and long-term future. So you need to be planning tomorrow, today. You need to be planning next week, this week, next month, and next is the end of the first quarter. Well, that's hugely important, especially if you understand seasonality. But then that means we need to think about the second quarter. In 6 weeks from now, it'll be too late. So anyways, so you have to have respect for the past. You have to have respect for the probabilities of the future, but also understand the context of what's going on now. Does 2.4 versus 2.6 really matter when it comes to CPI and inflation? No. Does it matter in the context of monetary policy? Yes. Does the midterm elections in November impact seasonality relative to non-election years? Yes. So it's not all numbers and it's not all prices. It's context, and the context of what? Understanding where's the best probability of success for trading and or investing. And everyone else is just an amateur, and you'll run them over like a freight train. It's not even fair. So free is a pretty decent price. Peace on earth. May the pips be with you. May your profits be above average. Have a wonderful day, everybody.